Well, the bad news is good news dynamic is back in markets. And the news last night in the US was very bad. The Bureau of Labor Statistics revised downward its estimate of the creation of jobs in the non-farm payrolls monthly read for the year to March 2025 by 911,000 jobs. That's a massive revision downward and suggests the US economy is nowhere near as strong as the previous data had led us to believe. Now, of course, that says a lot about the actual state of play in the US. But of course, it immediately saw investors leap to the conclusion that rate cuts are a given. And the speculation now is not whether or not there'll be a rate cut at the September 17 meeting of the US Federal Reserve, but how big that cut will be, whether it'll be a 25 basis point cut or a 50 basis point cut. Now, in my opinion, that's over-egging this. I don't think the Fed wants to be the one who rides to the rescue every time the US economy shows some weakness, but it does seem very likely we will see at least a 25 basis point cut next week in the US. And given that scenario, it's no surprise that US investors took the markets to new all-time highs. We have seen a positive impulse in markets globally. Here in the Asia-Pacific region yesterday, we had a strong day's trading. And while Hong Kong continued to outperform, a fairly tepid performance from Australia, it was Japan that took the spotlight yesterday with news that tariff barriers between Japan and the US will be lowered soon, and that there had been a resignation of the PM, Mr. PM Ishiba. And so that making way at the top was seen as a positive by investors, gave the Nikkei a big boost and saw it trade above 44,000 for the first time ever. And that positive impulse spread across the region. A lot of support for tech stocks in trading yesterday. Alibaba up more than 4%, Tencent up 1.5%, Xiaomi up 2.7%, and that sort of focus on the higher scalability and higher growth potential in tech echoed around the world. We saw a further decline here in Australia in trading yesterday. The non-bank financial sector came under pressure, although the banks held up reasonably well. The standout being ANZ, which announced a rationalisation and job cuts of 3,500 people. And the market seemed to like the outlook that was projected against. We have inflation data from China today, not expected to move the dial. The People's Bank of China not in focus for markets at the moment. But tonight in the US, we will see PPI data ahead of tomorrow night's CPI data. And with the focus on interest rates at the moment, inflation data becomes even more important. The concern here is that we'll continue to see weakness in the growth numbers, particularly the job numbers in the US, and an uptick in inflation. And that, of course, introduces the idea of stagflation, something that's very bad for economies and very bad for markets.